Hey, this is John. Welcome back to Next Crypto Prices. Let's now take a look at some price action, one wave at a time. Let's take a look at Bitcoin. It's been a while since I made an update. I think the last update price was getting out of this leading diagonal and at around 79,000. And I said it was a nesting of wave of lower degrees, and most likely price will shoot up much higher than the targets given by the FIB extensions. From the top, we had on the 17th of December, Bitcoin created a wave 3 cycle complete. So this wave 3 started from the low of wave 2 here, and within the third wave, we had wave 1, wave 2, wave 3, and wave 4. Wave 5 completed here at 108,000. Now this wave 3 of cycle degree is preceding a wave 4. Now wave 4, we know that they are allowed, if the count is correct, to retrace maximum 50% of the preceding move. The 50% lands at 61,892, so let's call it 62. We have price that dipped below the 23.6 at 86,400 and failed to reach the 38.2% at 72,854. Notice that this 38.2 is just below the former high that was made on March 2024. Now, there is a strong probability that this wave 4 correction is complete. So let me zoom in to give you a better picture. So from the top on the 17th of March, we had price create an A, B, C for W. Notice how the A wave is actually a zigzag. 1, 2, 3, 4, 5 for A, B, C for B, and then a diagonal to finish the C leg of this A. And then we have a B. Notice how the B retraces back between 38% and 79%. This is characteristic of zigzag formation. And then we had a classic diagonal for the C leg of the W. So the W is actually complete with a low on the 13th of January at 89,117. Following the W, we have an X to the upside. Notice how the X reaches above the 100% extension. So indicative of a running flat to be coming. And we expect the Y part of this WXY, I'm going to highlight it here, WXY, we expect this Y part to complete as a 3-wave structure. Now this 3-wave structure completed as follow. From the top, we had a 1, 2, and within the third wave, we had 1, 2, 3, 4, 5, essentially an extension of the third wave. The third wave actually looks like a diagonal. So we have a low for wave 3, and then we have a WXY for wave 4. Notice how this WXY is precisely composed of ABCs, one after the other, composing a WXY pattern. From this top of wave 4 on February 21st at 99,741, we had price create a 5-wave aggressive move to the downside to make wave A. So essentially the Y part is having an A wave as a zigzag formation. We have then 3 moves to the upside for wave B of this Y correction, and then 1, 2, 3, 4, and then 1, 2, 3, 4, 5 for wave 5 of C of Y. So there is a strong probability that this wave 4 correction that started since the top on the 17th of December found a low at 17,500, give or take. Now, if I go to the 4-hour, and we're going to look at the micro picture. If our assumption is correct and that we're done with this correction WXY for wave 4, then we expect wave 5 to unfold. And this wave 5 is expected to be impulsive. Price has found the bottom here for our analysis not to be broken at 76,589. And we then have price move in a diagonal formation to make 5 waves to the upside, forming wave 1. This diagonal formation found a top for wave 1 at 70.2% retracement, 87,991, so let's call it 88,000. The 70.2% comes between the top of wave 4 and the low of wave 5. Notice once again how the 70.2% retracement is effective. Now, if this is a wave 1 complete of a much lower degree, because remember, we're looking for a wave 5 of cycle degree to form to the upside. Now, this wave 1 is expected to precede a wave 2 correction. Now, wave 2 correction, we look generally for the 61.8% all the way down to the 85. Price has reached 61.8% and appears to have found a bottom. I, however, doubt that this wave 2 correction is complete, because what we have so far appears to be an A, we're making a B, and then we will be looking for a C. An area of interest for me to enter a long position very close to an invalidation level is if price reach close to the low of wave 2 of this diagonal. So essentially, if you look at the Fib retracement, anything beneath the 70.2% all the way down to the 78.6% is going to be of interest for me to enter a long position. If price breaks 85.4%, I will be very cautious because the invalidation level is very near. There is no indication that forbids price to retrace 99% of the preceding wave 1 for a wave 2 correction. However, the odds slightly increase as price is going closer to the invalidation level, that the level is going to be broken. So far, we have an impulse structure for wave 1, a beginning of wave 2 correction, and appear to be making a wave B. Wave B, so let's make an assumption. Wave B, if this wave 2 correction started with a zigzag, wave B is expected to retrace, if it's a zigzag, up to 87,185, the 79%. If we break above, then this wave 2 correction has found the bottom here, but I'm not keen on this scenario. So wave B is still in formation according to my count. I would, however, like to see price retest this low of wave 2, at least at $80,245. So the picture looks good for Bitcoin. Remember, level not to be broken is the low of this WXY. At, depending on your charts, it would be 76,600 and some change. Looking at a target, where could wave 5 take us? If we take our extension at the minimum expected target for this wave 5, if you take a Fib extension from wave 1 all the way down to wave 4, you have a 100% extension of wave A for wave 5 at 138,000, and a 1618, which is generally the target that we look for wave 5, is 176,550. So let's call it 176,000. So the picture looks good for Bitcoin, provided that this low holds, because if it does not hold, that means that this correction is not over, and we are still technically allowed to go as low as 61,000. Now, the problem I have with that is even if we break 38.2%, it could still be, we break and we reclaim, it could still be considered as a retest of the former high made in March 2024. The picture would still be valid for a continuation of the movement up, because you would essentially retest the former high. Now, if price breaks further down than 72,000 and reach as low as 61,000, let's call it 62,000 on this 50% here, the problem I have with that is not only you break the former high, but you actually trade back beneath the range that we were between March and August last year. And that would essentially break the market structure. It would significantly decrease the bullish picture and favor a continuation of a move down. Now, what is interesting here, if we expect a continuation move down for this wave 2, but not break this 76,500, it's very likely that price is going to find perhaps not today, but tomorrow is going to find some strong support on the touch of the 200-week moving average. As you can see, it's grinding up. Failed to touch it on the 11th of March and then rallied up. And perhaps this time, once we touch it, because if you look at it today, it's at 76,750. Tomorrow it will be a bit higher, 77,500. So it's very possible that if price continues the correction for wave 2, that it will get a reaction as it approaches this 200-week moving average. So this should provide a strong support, and it's a confluence with the idea of not breaking this low here. If this 200-week moving average does not hold prices, then it's very likely that we take out the former high from March, and this one is expected to hold as well. But from an Elliott wave perspective, we must not break this 76,500. So that's it for the video. I hope you liked it. I think the picture is very good for Bitcoin, especially if price keeps on grinding down for the wave 2. It will get very near to an invalidation level and therefore reducing the risk. I wish you a nice day. You take care of yourself. Bye-bye.